Ladies and gentlemen, good day and welcome to Q3 and 9 months FY2026 earnings conference call for Sutlej Textiles and Industries Limited. As a reminder, all participants' lines will be in listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during this conference call, please signal an operator by pressing star then 0 on your touchtone phone. I now hand over the conference to Mr. Sachin Karwa, Chief Financial Officer. Thank you and over to you, sir.
Thank you. Good morning, everyone, and welcome to the earnings conference call of Sutlej Textiles and Industries Limited for Q3 and 9 months ended December 31st, 2025. I will begin with a brief overview of the operating and financial environment, followed by our performance trend for the quarter. The third quarter continued to be challenging for textile industry globally. While there has been optimism around recently announced FTAs, we believe the actual benefit will take some time to materialize, as seasonal order placements were largely finalized earlier. At the same time, the industry faced persistent headwinds and elevated raw material prices, currency volatility, geopolitical developments, and logistical issues, particularly in Bangladesh. Despite these challenges, Sutlej has delivered a stable and resilient performance in Q3. We have recorded an improvement over Q2, both operationally and financially, and we expect Q4 to build further on this momentum, especially in terms of profitability. On the cost side, raw material prices increased during the quarter. Even as demand remained relatively muted, polyester and viscose prices, although impacted by higher crude and currency movements, remained largely stable, while cotton showed a marginal decline. Our fiber business played an important role in supporting the yarn segment by providing stability and partial insulation from volatility. As a result, combined yarn and fiber margins have improved sequentially. We have also started seeing the impact of our cost optimization initiatives, employee cost rationalization, and operational efficiency measures have delivered around 30 to 40% of the targeted benefits so far, with the further improvements expected over the coming quarters. These efforts are largely translating into gradual operating margin expansion. From a utilization perspective, our fiber and home textile divisions are operating at planned levels. Yarn utilization remains stable, although certain capacities continue to face margin pressure due to raw material inflation. Overall, we remain disciplined in aligning production with demand and profitability rather than chasing volume. Talking about quarterly financial performance, the standalone total income came in at INR 640 crore, which was lower by 2% on year-on-year basis. Gross margin was at 46%, which was higher by 350 basis points on year-on-year basis. EBITDA increased over 200% on year-on-year basis and stood at INR 25 crore with a margin at 4% for the quarter. PAT was reported negative 11 crores. On balance sheet position, our balance sheet position remains under control and we continue to follow a prudent approach towards working capital and capital allocation. Maintenance capex is being incurred as planned, while future growth capital will be evaluated holistically, aligned with product market optimization opportunities and value-added segment. With this, I would now invite our whole-time director and CEO, Mr. Ashish Srivastava, to share the business and strategic update.
Thank you, Sachin, and good morning, everyone. Let me come direct as to where we stand. Q3 performance improved sequentially. Q4 should be better than Q3, and we are executing our strategic pivot with precision. But more importantly, what you are seeing in these quarterly results is the foundation of something larger, a transformation from a commodity textile player to an integrated platform company with clear paths to value creation. The FTA announcements have created positive sentiment, and we welcome that. But we are not waiting for policy benefits to flow through. We are driving results through execution today. Let me walk you through what we have accomplished in this quarter and more critically where this positions us for the future. Starting with the business performance, we have achieved 3 significant wins that demonstrate strategic progress, not just operational management. A market diversification. We have opened newer markets in Far East and in Africa, adding to our existing international presence. Now, this isn't just a geographic expansion for the sake of it. It's a deliberate risk mitigation. Bangladesh, which faced severe logistical disruptions, now represents a smaller share of our export book. We have protected volumes while reducing concentration risk, and frankly, This was a test of whether our diversification strategy works under pressure. It does. The pipeline for additional market entries in Southeast Asia and Latin America is active and progressing. Export volatility isn't going away. We are clear-eyed about that. But our market footprint is now structurally stronger and more resilient. Domestically, we are seeing strong traction in synthetic and blended yarns, which validates our strategic shift towards higher margin technical products where customer switching costs are higher than our integrated capabilities provide a genuine competitive advantage. Now let me address the elephant in the room, home textiles and the tariff question. Our revenue growth continues in this segment, and here's why. We are positioned in complex, design-intensive products that cannot be easily replicated or substituted. We are not competing on price in commodity segments where tariffs would hurt us. We are competing on design capability, technical complexity, and speed to market in the premium end of the market. Order visibility in this segment remains healthy through Q1 of next year. Yes, customers globally are managing inventories cautiously, but our order book reflects strong demand for our specific capabilities. The turnaround in this division is complete, and it's now a growth and margin accretive business, not a restructuring story. What ties all this together is our integrated model, and this is where I want to spend some time because it's central to understanding our competitive advantage. The fiber business isn't just supporting yarn, it's providing stability that standalone yarn players simply cannot replicate. When raw material volatility spikes, our internal integration absorbs shocks and competitors must either pass through to the customers or absorb in their margins. This is precisely why our combined fiber yarn segments improved sequentially despite cotton and polyester price pressures. While yarn profitability remains under pressure from raw material inflation, the integrated model is holding, and more importantly, it positions us to capture value across the entire chain as market conditions normalize. Which brings me to the bigger picture, where we are taking this company. We are not just running these three separate businesses. We are building an integrated textile platform with specific, defensible capabilities that unlock adjacency opportunities. And I want to be very clear about what this means in practical terms. Our platform today comprises backward integrated fiber manufacturing with polyester, multi-category yarn production across synthetic, cotton and blended segments, design-led home textile manufacturing with complex product expertise, established distribution across 15 plus countries and with diversified customer relationships, and process excellence that meets global technical standards. Each of these capabilities took years to build. The question we have been asking ourselves, where else can we deploy these capabilities to create value? We have identified clear paths, and these are not theoretical. We are already in pilot or evaluation stages as far as these paths are concerned. First is technical textiles and performance fabrics. Our fiber and yarn capabilities position us naturally to enter industrial textiles, automotive fabrics, and protective textiles. These are higher margin, specification-driven segments where our technical expertise and quality systems are directly transferable. Second is sustainable and circular products, and this is where market pull is accelerating faster than we initially expected. Customer demand for recycled polyester, bio-based fibers, and traceable supply chains isn't a nice to have anymore. It's becoming a requirement in several markets. Our integrated model allows us to develop closed-loop systems, also giving us the flexibility of using post-consumer waste where required in our fiber production and creating fully traceable yarn-to-fabric solutions. We already have the recycled PET, and this isn't a CSR positioning. This is a commercial opportunity where customers will pay premiums and where regulatory tailwinds in Europe and North America are creating structural, not cyclical demand. The third part is vertical integration into downstream applications. Here's a key point I want to emphasize. These adjacencies leverage our existing platform. We are not diversifying into unrelated businesses or chasing growth for growth's sake. We are extending into segments we already have a competitive advantage, where our capabilities are differentiated and where the economics are superior to our core business today. Capital allocation will be disciplined. We are conscious of our targeted IRs and payback periods. Where possible, we'll prioritize asset-light models through partnerships and tolling arrangements. On cost and efficiency, employee rationalization and process improvements have delivered till now roughly about 40% of our targeted annual savings. The remaining benefits will flow over the next 2-3 quarters. But this isn't a one-time cost reduction exercise. We are embedding continuous improvement into how we operate. On utilization, we are being deliberate. We are not chasing volumes at suboptimal margins. Fiber and home textiles are at planned utilization. In yarn, we are running capacities where we have pricing power and product differentiation. As our product mix shifts towards value-added segments, utilization will increase without margin dilution. Our investment thesis is straightforward. We are transforming from commodity textile player to an integrated, innovation-driven platform company. Our businesses are improving sequentially. Our strategic priorities are funded and on track, and our platform capabilities unlock adjacencies that create differentiated value for all stakeholders. Customers get innovation and reliability. Employees get a growing, sustainable business to build careers in, and you, our shareholders, get improving returns on more resilient, higher margin business models. External headwinds are real. Raw material volatility, geographical uncertainty, currency movements are all there to stay. We are not dismissing these, but our strategic direction is clear, execution is disciplined, and we are building structural competitive advantages that compound over time. Q4 should demonstrate our continued momentum, and the next year will demonstrate strategic transformation. Thank you for your support and continued trust in Sutlej Textiles. Happy to take any more questions which might come.
Thank you very much, sir. We will now begin the question and answer session. Anyone who wishes to ask question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Nish Shah from Stellar AMC. Please proceed.
Hello. Hi, sir. I'm audible?
Yeah, very much audible.
So thank you for the opportunity. So my first question is on the margins. The margins have improved slightly this quarter, but they are not still at comfortable level. So what are the key levers which can improve margins from here?
So I think, as I addressed in my speech, that basically what we are looking at cost efficiency, because that's something which is internal. Markets, while we don't have direct control over the consumer or the customer demand, but we are looking at market diversification, which is a process which is on. And third, and the most important, which is inherent to our growth, is product diversification or product value upgrade. So we have seen some benefits accruing in the last quarter, and we are confident that this trend is going to only continue in the coming quarters.
Okay, so what margin levels are we comfortable at?
So I think it will be right now speculative of me to kind of put in, let the Q4 set in, and we will see where we are kind of heading to. But all I can say is that we are in the right direction.
Okay. So just one more thing on that. So given that the margins will be seeing positive from Q4, let's say the revenue and what revenue and EBIT levels do you see comfortable to see a PAT turning positive?
So I think, again, we are right now focusing on the operating margin, right? And what we are saying, we are not chasing volume business. So it's more about a turnaround through internal controls and product upgrades. Now, as the product upgrades happen, the top line automatically will increase. But it's not that we are adding volumes in our non-value added segment. So even at similar top line, we can expect much better margins. That's what we are chasing at this point of time.
Okay, sir, understood. So are we actively reducing our exposure to low margin segments?
For sure. So I think, if you have seen that, so within the 3 clusters, home textiles, we are in any case in the niche segment where the margins are comfortable. Fiber segment is truly supporting the growth. And as far as the yarns is concerned, it is our stated objective that in about a year's time, we want to move 1/3 of our portfolio into value-added yarns. Now, obviously, this will mean that our bottom line will get supported to a large extent when we clearly pivot and kind of execute this roadmap.
Okay. Okay, so with the India and US trade situation evolving, so what could be the potential risks or opportunities for our business?
So I think, again, that's a good tailwind is what I can say. Now, you see what happens is that even if it gets operationalizes in the next 2 weeks or 3 weeks, the real effect of this will only be seen in about 2 quarters, because you see the placement of the orders which had to happen. If you were to look at from the customer side, for the spring summer has already been done. So it takes a cycle before people will want to kind of come around and look at increasing exposure into India. But it's a very welcome change is all I can say. It's a welcome change. It brings the sentiment quite positive, and it will help boost the apparel trade and the textile trade also for the country.
Okay, sir, understood. Sir, given the Bangladesh issue, sir, any issue leading to long-term pricing pressure, or do we believe that?
So I think yesterday was a big event there. We are hoping that once the results come, then there is an elected government which comes into place, and all discussions can only happen with an elected government. Till now, it was an interim government, so it was difficult to kind of get our point of view to them. So once the elected government comes in, then possibly things might change, and it might open bigger. It might again reset the Bangladesh-India trade ties.
Okay, sir, got it. So given the entire global demand uncertainty and Bangladesh trade disruptions, are we seeing any demand patterns changing for melange and synthetic yarn? Is there some change in customer preference, or how is it so?
So I think, what is happening is that obviously the lead times when it goes away. So on the synthetic side, the domestic market is quite buoyant, it is growing. So that is where most of the thing goes. We also have in the dyed segment, in the synthetic side dyed segment, a lot of knit applications which are coming in. So a new product category is kind of emerging. So that is quite a good change which is kind of happening. On the melange, cotton melange, we see some trend, moving from melange to yarn dyed, because of the speeds and everything else. And because that was on the melange, they were not wanting to, they wanted to not hold larger inventories, because that has been the case with most of the retailers. So there is a small change. We are also calibrating at our end as to how we can balance or make capacities fungible between our fiber dyed and our yarn dyed cotton.
Okay, sir, got it. So last question, sir. Recently there was an article on that said that if India purchases US cotton from US, there will be no tariff, and similar option is also given to Bangladesh. So what impact will it have?
So I think if you see till December last year, they had opened up the cotton imports, right, without duty.
Okay.
So it was already there. Now from after December, they said that you can import the cotton. Now, what effect it will have will all depend on what customers are kind of looking at. Whether we also are waiting to see the fine print that if we are importing the cotton, the US cotton, whether those garments are going duty free. There are certain restrictions, as I understand that there will be certain quotas, certain quantity quotas and all which are there. So we are waiting for the fine print to kind of come in, and then only it will be prudent to kind of comment on it.
Okay, sir. Okay. Thank you, sir. Thank you so much for answering all the questions patiently, and all the best.
Thank you. So no problem. Thank you, Nish.
Thank you. Ladies and gentlemen, Anyone who wishes to ask a question may press star and one now. I repeat, to ask a question, please press star and one this time. The next question is from the line of Shankar Raja, an individual investor. Please proceed.
Hello, am I audible?
Yeah,
Yes,
Shankar,
sir,
you're
you
very
are
much
audible.
audible.
Yeah, thank you, sir. Thank you for this opportunity. My questions are focused on home textile segment of ours. So, sir, what is the strategy in this segment? Are we focusing more on growing the volumes aggressively, or is the focus more on improving the margins and strengthening the product mix?
No, I think what we had very clearly, in my introductory comments, what I had said is that our home textile business is one thing which, in spite of the increase in tariffs, did not face any headwinds. That was purely because we are positioned in a design-intensive products and which cannot be easily substituted. They cannot, supply chains cannot move. So we continue to work on this strategy on focusing on more value-added pieces in the home textile. And we are looking at a market diversification. So, while we are doing reasonably okay in the US market in the segments, there are enough opportunities which are presenting themselves in different other geographies. The other thing which we are looking at in the home textiles, we have incubated the whole made-ups story there, and that has contributed to some revenue in this year. We are going to build the made-ups, as I said, how do you go from midstream to a little bit of further midstream, not really the downstream, where you not only do just the substrate, which is the fabrics, but also provide the products, whether it is something like a bed in a box or something like the kitchen over the table piece. That's something which we are evaluating. So to answer your question straight, we are looking at operating in the value added segment and continue to grow that particular piece.
Okay, sir. Thank you. And another thing was on order book. You did mention we have order book visibility till Q1 in your opening remarks. Would you like to quantify that in some context, or could you just say whether it's a strong order book or something?
No, so I think it's, when I say the Q1, so ideally it's not because that only means that these are the whole entire home textile business. Part of it is the catalog business. Part of it is the which goes into the US market or the Europe market. When I say the order book is our order book, there is a visibility of FY Q1, which means I have a reasonably long order book, which is close to about 120 days. Now, that may also force us to relook at debottlenecking some of our capacities, so that we can really take advantage and build our volumes also in this segment. So it's a good problem to have. We are trying to see how to kind of streamline this entire piece.
Okay, thank you for that. So this answers my near-term visibility, but what about the long-term visibility of this segment? So do you think this segment could be a meaningful profit contributor in the long term, or say over the next 2 years or 3 years? Or
for sure, I think so. Sorry, continue. Complete the question.
I just wanted to say, will this be a meaningful profit contributor, or will yarn be our core focus of the business? Like how is this transition?
So at this point of time, this is just about the home textile piece is just about 7 to 8%. We want to build it to 20% of our total volume or total top line.
Okay.
So we are going to double the business in home textiles.
Okay, so with that aim in our domestic markets, I can see our total active stores in this segment is around 480. So are we thinking to add more stores?
So I think our domestic strategy is slightly different. We are going to focus more on modern trade and more on OEMs, as we would call it, and also kind of grow our brand, which is homegrown brand called Nestera. So these are the three things which are where we are focusing on and growing on.
Okay, and one last thing, apart from the top three states that's mentioned in our PPT, that's Maharashtra, Gujarat, and Delhi, are there any upcoming states that you would want to focus on?
Sure, we are
This conference?
focusing, we are looking at the South region very, very closely and trying to see what is the best way to expand our footprint there.
Okay, sir. Thank you. Thank you so much for this opportunity. I'll join back the queue if I have anything else. And all the best for your future. Thank you.
Thank you so much, Shankar.
Thank you. The next question is from the line of Raj Doshi, an individual investor. Please proceed.
Hello. Thank you for the opportunity. Am I audible?
Yeah, Raj, you are audible. Please
Yes.
go ahead.
So you have mentioned about the value-added products. So can we know what is the current mix of value-added product, and how do we expect it to shift meaningfully in near future?
So I think, as I said, that I did mention that we would like to have at least 1/3 of our products, in the value-added segment. When I say the application segment, you see the yarns, what we do, they go in for various applications. They go in for apparel, knit or woven. They go in for industrial applications. They go in for the technical textiles, basically the FR piece which is there, and in the automotive segment. So what we would want, so this is from the application lenses, right? From the fiber lenses, what I mean is that how do we move up from the basic cotton, polyester, viscose to either circular or post-consumer cotton, recycled polyester, or other fibers like aramids or sustainable alternative fibers, which should form part of our portfolio. We are already engaged in almost all of them. We just have to build volumes in this.
Okay, sir. And how different are margins in value-added yarn compared to the regular yarn?
So I think definitely so if you look at the basic raw cotton, right? The raw cotton yarn, I mean the gray yarn which kind of goes in. The value addition, I can only give you the spectrum, I mean that's where the whole piece on value addition is the lowest, and it requires continuous investments, reduction of the power cost, and then on the extreme end, so if I were to say that, a cotton fiber, maybe let's say is a $1.5 per kg, the fiber itself, and let's say the aramid which is there or the Kevlar which is there is like a $40. So that's the spectrum. Now obviously,
okay,
when you look at somewhere in between, or where you kind of come into sustainable hemp, it's somewhere about $5. There is flax which is there, there's banana fiber which is there, there's recycled cotton which obviously gets you a premium. So it's the whole straddle, which is there. And as you go up the fiber chain, there is obviously a little better value which you can capture in the entire process.
Okay, sure. But there is no any margin range which you could provide right now.
So again, it all depends, because there are challenges, but definitely the margins are. If I were to say that there is a 1x margin in the basic cotton, you could go up to at least 2.5 times in the specialty products.
Okay, sure. And also related to cotton prices, now like there were price increases in cotton. So how did that impact? Like domestic prices were higher than the global level. So how did it impact our exports?
So again, if you look at primarily, so overall it surely impacted for the country. But if you look at from the Sutlej point of view, in our total portfolio, cotton per se is roughly about 40 to 42%, right? And the balance is more the synthetics play which we have. And even in the synthetics, the prices have kind of gone up over a period of time. So in cotton, the price has, which was 51,000-52,000, has gone up to 55,000 in the range what we operate upon. So yes, it did have an effect, but lot of it, because in the basic cotton, the pricing gets, normally when there is a cotton increase, gets passed on to the market.
Okay. Okay, sure. So that answers my question. If I have anything, I will fall back in queue. And thank you and all the best. Yeah.
Thank you, Raj. Thank you.
Thank you. The next question is from the line of Deepak Karwa, an individual investor. Please proceed.
Hello. I'm audible.
Hi, Deepak. You're audible.
Okay. So sir, my question is regarding the global conditions, like global scenario. In what gives you a confidence that money can improve looking about the global condition uncertainty? Is it like cost reduction, better product mix, or renewable power, or like something else?
So I think, if we were to look at the global uncertainty, I think that is there to stay. It's not something, now it is, that's an event, and you give strength to the event by the way you react to it or respond to it. So what we are saying is that in a way it is a good wake-up call for India. Whatever the tariffs which kind of came into India, because we were highly indexed, almost 33% of our total exports of the textiles was indexed into, out of the $35 billion which we do, almost $10 to $12 billion was US. And obviously the US do offer the comfort of the larger volumes and continuous orders. But I think what it did to the community, and I think if we were to look back 5 years from now and see, it's a wake-up call, because people have started looking at what are the options and evaluating how to de-risk geographies, even from a supply point of view. So, A, newer geographies will open up. B, see, the cost efficiency and the process efficiency has to be there. That has become a hygiene. You can't, you can't compete with a new age vehicle in the old construct, so to say. So you will have to kind of invest there continuously if you have to remain in this entire business. You have to manage your energy cost as you kind of move forward on that. The value addition gives you the edge, as we have seen, that if you are into a segment where your stickiness is higher with the customer, it is difficult for the customer also to move away from you, this in spite of everything what happens. So that I would say value-added product, more integrated supply chain to the customer supply chain gives you the added advantage. Cost, processes are the hygiene which you need to keep in, and risk diversification is something which you need to be consciously working upon on different markets. So how do you diversify?
Okay. So considering the global environment, what we are focusing more on, protecting our margins, if we even a volume slowdown, or we are prioritizing ours to maintain capacity utilization?
So I think it's a combination of both. It's not like a single strategy. One is obviously we are looking at diversifying the market base, which we have done a little bit. We have opened up 3 more markets in the last quarter, and that's a deliberate attempt which has been done from our end. Now, when you enter into a new market, obviously you need to have a market strategy. You may not necessarily command the premium because the customers will want to test you. And then once they test, once they know once they understand the English you speak, you understand the English they speak, then possibly the relationship kind of grows. So initially, maybe the margins are a little challenged because, you want to build the market, and then slowly once you kind of establish the proof of concept, then the relationship becomes a little more mature, and you can talk about a more long-term stable relationship with sustained margins with these customers. So what we are doing is diversifying the markets. We are also diversifying our product segment. So initially, what was limited to only apparel segment, we are deliberately moving into automotive, industrial yarn segments, the FR segments, so that our there again, while the cycles are little longer because it's a process of compliance and certification, but once you are done and once they are sure of your quality, the stickiness increases.
Okay. So is it right to say that current margin pressure is due to external factor or is like something else?
So, any crisis is an opportunity is what we believe that, and I think obviously what you can't control is the external environment, but what you can control is the internal environment, right? I mean, so obviously cost efficiencies internally, whatever can be done, and never ever it is a single factor which affects your entire margin. So it's a combination of both. What we are doing at our end is, as I said, looking at our process efficiency, which can give us a margin or two, whether it is the people cost or whether it is a non-value added, non-essential segment getting automated, or through a value addition which we provide to our customers, a value added product. So it's a combination of both.
Okay. Understood, sir. Thank you for answering my questions. I'll join back the queue if I have something. Thank you so much.
Sure. Thank you, Deepak. Thank you, Deepak.
Thank you. The next question is from the line of Hari Kumar, an individual investor. Please proceed.
Good morning, sir. Am I audible, sir?
Yes, Hari, you're very much audible. Thank you for...
Okay. Thank you for taking my question, sir. The first one is regarding our capacity utilizations, like what percentage they are. And related to that, our quarterly run rate, it was almost reaching 1,000 crores. Now we are back to 650. Is it due to low capacity utilization or pricing has gone down?
So I think, what we have done is, our capacity utilization is roughly about 94% at this point of time. Now, when the cotton was 100,000, obviously it's a direct pass out to the market. At that point of time, possibly our quarterly turnovers were in the range of about 900 to 1,000 crores. Now the cotton prices obviously got readjusted to the current of 52, 53,000. So I think we have been operating in the last 8 quarters in let's say 700 to 600 kind of a per quarter revenue rate, and we are maintaining that and as I said, it is a question of not chasing purely the top line. It is also about ensuring how the bottom line is kind of built upon in near time. That's the whole focus.
Okay. And the second question, sir, regarding this raw material conversion, like after this removal of import duty on cotton, has it turned favorable, sir? Raw material to product conversion difference?
No, so I think again it is what use it is going. See, the knit industry, the cotton knit yarn which it goes, it is always under pressure, right? I mean, if you just compare between India and Bangladesh, India, the Bangladesh yarns are at least 30% cheaper if they produce 30% more expensive if they have to produce it locally, and that has been their grievance over a period of time. So, stabilized cotton prices bring in stability in the yarn prices over a period of time, but if you look at the India cotton prices, that has at least gone up by around 7-8% in the last 6 months. What worries and what is more troublesome for the industry is the volatility in the cotton pricing. If it is volatile, one day it goes up by 2,000, other days it comes down by 2,000. That swing is what makes, because nobody buys the cotton for the entire season in one go, right? So one has to kind of build positions as they go around. So volatility hits, but the price for now has been stable. So your question was whether it has affected the conversion cost or not the conversion cost. I think the increase in cotton prices, if you are in the basic yarns, normally gets passed on. There is a lag for sure between the cotton price increase and the yarn price increase, but it has to kind of get passed on.
And lastly, sir, we are in a few companies to have a traceability, like we are totally integrated. Like, are we not getting the same or pricing advantage, sir?
So I think, you see,
when we are exporting to Europe especially.
Yes. So I think we are building it up, because I think that's what I said, that we have all the components. It's about just putting it together and ensuring that we tap into the right markets who value this. Once the EU FTA comes into place, this is going to be one of the realities which will hit the textile players in India, how ready they are, whether it is the CBAM, whether it is the EPRs, or they will want the traceability. And we are, not because that they want, but because we believe in it, we are making ourselves ready. So that it's not about just saying that we do this, how do we demonstrate it? So, that is the piece which is being worked upon at this point of time.
That will show in future profits, sir?
For sure. I think, if you see, it does not, the ESG scores are, or SDG, whatever has been spoken about, it is not only from the customer side, even from the financial institution side. They are offering concessional capital access to companies which adhere to their SDGs, or which are there to committed to reducing their carbon footprints, and this has even come to India.
Okay. Thank you very much, sir. Thank you very much for that.
Thank you, Deepak.
Thank you. The next question is from the line of Deep Doshi, an individual investor. Please proceed.
Yes, hi. Can I go ahead, please?
Hi, Deep. Please go ahead.
Okay. So with reference to the slide 5 of the investor presentation, the yarn business which is there. So in Q3 FY26, when it comes to EBIT, you have made 1 crore in that business. So just wanted to know, like, the yarn business contributes majority of the revenue, but the margins have remained under pressure. So what are you doing over here when it comes to the product mix or customer segments that can help the profits over here?
So two things. I think I did cover it initially, but I think specifically for the yarn business, two things which we are doing. One is working internally as to how we can reduce our costs. And there are 2 or 3 very clear levers on that. One is how do we reduce our energy cost, because energy cost is roughly about 40% in the yarn conversion, and the states in which we operate have one of the highest tariffs, whether it is Rajasthan or whether it is Himachal. So we have, what is in public domain is what I can share, that we have already kind of tied up with for renewable energy, and that benefit should start accruing in from Q1 of next year. That is number 1. Number 2 is on the cost of people. There we had initiated certain changes. We have kind of converted the 3 units into 2 fulfillment centers, and we expect at least 150 basis points reduction in our manpower cost as we kind of move forward.
Okay, so got it. That was like really helpful.
Yeah, so that's the internal point of view. From the external side, they are obviously all that product play, geography de-risking, how do we optimize more of melange capacity, which became under pressure because of Bangladesh road transport coming to an halt. That's the go-to-market strategy. So we are working on both sides to see how we can best uplift the sentiment in the yarn business.
Okay, got it. So can I expect some better profitability from Q4 onwards itself, or should I wait for some couple of quarters more?
So I think what we are seeing is there is an upward trend, and this trend will continue. Now, obviously, it is dependent on in spite of the external conditions we have kind of made these positive turnarounds. So they will only get better as quarter on quarter. So it's not that I will say that it's not a hockey stick projection that it will. Right now it will dip for a few quarters and then it will come up. You will see improvement quarter on quarter. The real benefit of it possibly we'll kind of realize in about 2 or 3 quarters from now.
Okay, sir. Thank you. That was useful. And just a couple of questions more. If I can go ahead, please.
Yes, please.
Okay, so just coming to the market scenario, so I think that the industry is gradually shifting towards synthetic and blended yarns, right? So how are we positioned to benefit from this? And are there any plans of capacity expansion, or what's our strategy? Are we focusing more on the specialty yarn side of things?
So I think when you say what you mean is actually the industry is pivoting more towards the activewear segment or the, now in the synthetic, there are obviously different segments. One is the suiting segment, which is the polyviscose suiting, which goes into more of the formal wear. The polyester viscose knits, which forms a part of activewear segment. And then there are, plays of fiber, which are micro denier, which gives you a different yarn. And also, as far as the spun yarn is concerned, if you are talking about the filament yarn, currently we don't have any plan to get into that filament yarn. Within the spun segment, whatever plays are possible, we are experimenting, and we are hopeful that we'll be able to, the capacities which we have are good enough to capture the value which the market has to offer.
Okay, got it. And this spun segment, what you were referring to, how is the response from the client side? Like, are we getting a positive feedback from them?
So it's building up. You see, it's a cycle. You test, and then the whole cycle. But there is a positive sentiment on that. Is all I can say.
Okay, so got it. So can I just take one last question when it comes to the home textile business, please?
Yes, please.
Thank you, sir. So just wanted to know more about the competitive scenario in the market currently. So are we facing any pricing pressure from countries like Bangladesh, Vietnam, or Turkey? I think you highlighted something about Bangladesh in the past, but can you just tell me more about the competitive intensity right now, and how are we trying to face this? And just wanted an outlook about this as well.
So, okay. So I'll give you a general outlook, and then I'll talk specifically about Sutlej. You see, the home textiles has a varied spectrum. There is this whole over the bed segment, which is the bed sheets and everything which kind of goes around. Then there is this whole upholstery segment, which is more to do with the furniture, the curtains, and then over the table kind of segment which is there. Now, the value chains in all of these three are quite different and intrinsic, and it's not so. Bangladesh for sure is not a competition as far as the home textiles is concerned, because again they don't have. They are more onto the fashion apparel side, for which they kind of work upon. The competition on this is let's say more from China and more from Turkey, because that's where things kind of work around, and also from Pakistan on the basic sheetings, which are more of polyester cotton. India has an inherent advantage of the cotton supply chain, and that's one of the biggest advantage. Almost 23% of the world cotton is in India, is what we produce. So because of that inherent advantage which India has, the supply chains are not easily replicable. And then coming specifically to Sutlej, we operate in the value-added, design complex, technical expertise required kind of a segment, where we have made our production facilities a little more modular to offer to our customers more value-added services like just-in-time, or we work with them on a TCO basis, which is total cost of ownership basis. So that segment remained protected even when the tariffs were 50%, which only goes to prove that there is reasonable price elasticity, which we can kind of dig in as we kind of move forward. So we will continue to operate in that segment, and we will only move a little bit of downstream there by offering a full bag in a bed, bed in a bag solution, or over the table products to the market, to the customers which we have.
Okay, so I got it, and this was really helpful. And anything about Turkey? I think you covered Bangladesh and Vietnam. Anything specific about Turkey as an investor I should know?
No, so Turkey obviously has an inherent advantage because it is closer to Europe. Most of the brands are looking at on-time supplies. So in spite of whatever cost if they were to view it, so Turkey remains a country which is not again easily replaceable.
Got it, sir. Thank you. This was really helpful. Best of luck for the coming quarters.
Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. I now hand over the conference to management for closing comments. Over to you, sir.
Thank you everyone for your continued support in Sutlej Textiles. If there are any further questions, you can reach out to us through our advisors, and we'll be happy to engage. Thank you once again.
Thank you. On behalf of Sutlej Textiles and Industries Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.